David, how are you?
I'm good, thanks. How are you?
I'm doing well. How's New York?
New York was great. It's nice. It was nice to be back in my quasi hometown for a week, but I'm back in the Boston burbs today.
Very nice. Where in Boston are you right now?
Lexington, Mass.
Very
So
nice.
don't ask me where that is. I know it's to the left of Boston. I've been here 3 years, but I still consider myself a newcomer. When somebody asks where are you from, I say I live in the Boston burbs, but I'm from New York. I haven't
Excellent.
gotten over the
Very
hump yet.
nice. That's awesome. Give us a little bit of a background, 2 minute. I know that we both work at Amazon, but I don't think our paths cross there. Give us a 2 minute background so folks know a little bit about your background.
Sure. The super quick and dirty is I was a banker and investor on Wall Street for 10 years. And I left. I started a couple of companies, sold the second one, and subsequently joined two different corporate venture funds as their entrepreneur in residence. And then I ended up at Amazon. I co-built the AWS startup team, and that was in 2014. I spent the most of the next 10 years doing that with a brief stint at Stripe for a year doing the same. And then post I guess my big tech career, if you will, I had left and I've been focused on what I'll call GPU compute opportunities and AI, blockchain, metaverse, et cetera. And so that involves advisory, mentoring, consulting, and investing in things like GPU cloud and AI software infrastructure. It turns out, not on purpose, but given the banking and investing I did and the earlier part of my career, it turned out that was in web hosting and internet infrastructure then. But I realized in retrospect, I've spent most of my career in digital infrastructure, unbeknownst to me.
Okay, so the reason I wanted to talk to you was because of Coreweave. Everybody's hot darling, mine too, because I made money, but that's a different issue. But you did an extensive amount of work on Coreweave. You've done a lot of work on GPUs themselves.
Mhm.
For the uninitiated, people like me that invested in NVIDIA in 2016 didn't quite forget it, but didn't touch it at all. Walk us through NVIDIA 20, circa 2022, 2023. What happened? And then talk us then through this GPU gold rush that CoreWeave and a host of others are doing as well.
Yeah. I can only give you kind of like my personal
Sure.
narrative through it, which was I guess this is it was sometime during or slightly after what I'll call peak COVID, because I remember I was sitting in my basement office in Brooklyn, and I was on the phone with a developer friend of mine. We were talking about blockchain. I'll just call it my Amazon artificial intelligence device because I don't want it to start talking to me. It was sitting in front of me in front of my computer monitor. And my son I guess he was probably like 5, 6 years old, was upstairs playing Roblox or some, let's call it metaversey kind of thing. And I was like, why are these three things, blockchain and artificial intelligence and, for lack of any better term, metaverse. Um, why are they happening at the same time? Like they seemed like three really disparate things. And all of a sudden I was like, oh, NVIDIA. I had traded NVIDIA as a hedge fund investor many years earlier, and I was like, I concluded with absolutely no data at all that NVIDIA must have hit a tipping point in price performance for compute that was making these things all possible. Um, I did buy the stock then. If I had bought enough, we would be taking this call from my private island. So I don't want to pretend
Yeah.
like I didn't only buy NVIDIA. I'll talk about NVIDIA and I'll talk about Coreweave and the ones I got right. So and leave out the ones I got wrong. I won't leave out the ones I got wrong.
I've
But
got
I
way
was
too many wrong for me to be able to
right.
make a list of that.
Yeah, I actually like talking the ones I get wrong. But either way, the so that was like the first my first exposure to what was going on. And then at Amazon, at AWS, we were supporting a lot of companies that were using GPUs to compute. Um, so that happened. And then fast forward just a little bit. There was a company that I had. The co-founders I'd known since 2015. So at that time, it was 5, 6, 7 years. It was a company called Paperspace. It was legit one of my favorite early stage companies that I worked with uh, as like with my role with Amazon. Not even so much of what they were doing, just like two really great, smart technical founders, heads down, building stuff and listening to customers and evolving. They had started out as a like virtual desktop
Hmm.
for high performance compute. Short story is their customers kept asking them, like, yeah, this is great. Can we have instances? And so they evolved into what later became called GPU Cloud. So as AI started to explode a few years later, I rang up Daniel, one of the co-founders. I was like, you guys must be doing all right now. He's like, yeah, the market certainly came our way. And largely, again, yeah, you got a smart team, heads down, just doing the work. Like I wouldn't call, they didn't pivot, they evolved. Um, and yeah, they were doing really well. They wanted to raise a big round because companies like Coreweave and Lambda were doing the same. They were all around the same size at the time. Um, the short story on Paperspace is that their investors compelled them to sell the company to DigitalOcean for $111 million in cash, which isn't a terrible outcome.
Yeah,
Um,
yeah.
in a
100 million. No, that's not
vacuum,
bad at all.
yeah,
That's
right.
very
No,
good.
yeah, I mean, but given the current valuations of companies like CoreWeave, like, yeah, I think someone look back and be like, "Ugh." That said, I was, Paperspace had a really cool software interface, but this company CoreWeave, it was growing and people were investing in it, but it was like, how could they possibly compete with Amazon where I worked at the time, or was just in the process of leaving, or GCP or Azure? Not because I was like these companies are so terrific, but I was just like, look, this is AWS's core business, right in the crosshairs. AWS is hugely capitalized, has some an adoption rate that some would say, is somewhere at 70%, especially in top tier venture portfolios. Um, and so like my first call was to some folks really in the know, so like some technical architects, and they're like, "Look, AWS just doesn't have instances to sell." So I was like, "Oh, okay. So the demand must be insane." Okay, good data point. Data point two was hearing anecdotes that I'm not sure how true this is with the real rationale, but NVIDIA was limiting deliveries of their latest GPU rounds to AWS and the hyperscalers. Part of that was because they did have limited inventory. Part of that was because they didn't want to cede the market to the same three hyperscalers. So that was point number two, and I was like, "That's interesting." And then they invested in Coreweave, so I was like, "Oh." Suddenly, I was like, "Is NVIDIA going to compete directly with AWS via this Coreweave by proxy?"
Hmm.
And then, like, the most interesting thing to me, what was like my gigantic aha moment, was a friend who's actually now at CoreWeave, but was AWS at the time, suggested I listen to Jensen Huang's Computex presentation in 2020. I don't know, something with a low number. Um, and I quite literally just had to listen to it to fall asleep on my sofa. Um, and but then he threw up this slide that the short of it showed it was like a CPU-based data center can train one LLM on X, I think it was like 10 million bucks or whatever the money was, and this energy level. And an NVIDIA-based GPU data center can train 44 on the same price but lower energy. And even if Jensen was, he's one of the best showmen out there. But even if he were off by a factor of 10, you're still talking about like, multiples of improvement in economics. And all of a sudden it was like, oh my God, for the first time in my experience, I had already left AWS by this point, but with AWS and others, like there was an actual fundamental economic advantage for a company that wasn't called Amazon, Microsoft, or Google. Um, and if you looked at the pricing of GPU instances circa 22, 23, versus, at the neoclouds versus the hyperscalers, it was like at least a 50% discount, if not more. And the reason wasn't they were trying to undercut them. A big part of the reason was they had different economics. And
Hmm.
so
Yeah, yeah.
that was like the big aha moment. It was like, oh my God. Um, It was kind of off to the races from there. And then there was a whole bunch of stuff about economics and the build and adoption and what's going on. I mean, my original thesis on GPUs, I wrote a piece called "Got GPUs," like "Got Milk," and like I always look for that one big data point or chart that shows why something is happening. And in the 90s, it was 100% of US households had computers and only 20% were connected to the internet. That gap was destined to close. It did.
Yeah.
In the tens, it was, one of them was like, uh, adoption of cloud by top tier venture portfolios was upwards of 70% or more, but less than 10% of total global IT spend was less than 10% cloud, and so that was destined to close. This time, there are approximately 400 million CPU units shipped per year, and quite
Mm-hmm.
only 40 million GPU units. This is a completely unfair comparison, but like, and every GPU needs a CPU attached, but that meant that there was a 10-to-1 CPU to GPU attach, or a 10% GPU to CPU attach, and that number had to go up a lot. Uh, and so that's how it started. And then when large language models started to change the way people design software, I realized there's an even bigger, a much, much, much bigger story.
Yeah. Tell me a little bit about Coreweave. I know that you made the move back again. We talked about Coreweave last time we spoke for a little bit. One hand, it seems like a financial engineering play, not like a technology play. On the other hand, it seems like one of the most fastest growing businesses in the infrastructure side I have ever seen. And now they're making a move today, or maybe was it yesterday? They're making a move to acquire something totally out of left field, which is an energy company. Where do you think their future is? What do you think their strategy is besides just buying a bunch of GPU, NVIDIA owning a portion of them, and they're renting it out to Microsoft
Yeah.
and Google and now OpenAI and everybody else?
Yeah. Disclaimer: I am a shareholder, and I do have friends there, so I want to make sure that I am biased. I want to make sure that's perfectly
Same
clear.
here. Same here, by
Um,
the way.
okay, so I came like I feel like I came to this conclusion having started with the same kind of like not like no, not negative but critical or dubious thought about like how can these guys compete, with these hyperscalers. And so and I just went through like there was this economics issue, um, and so that was important. Then, if you, especially at the time when this started, the numbers have changed, but like the general direction is comparable. At the time, the if you if you purchased an H100 for
Mhm.
X dollar if you for every $1 you invested in H100s, you got $1 per year for 5 years in revenue.
Oh, wow.
Okay. Um, or like and subsequently cash flow. The long story short was I don't have the numbers right in front of me. It's in one of my screeds. But the long story short is the economics were insane, and so when they're locking in contracts like this, it was like, all right, well, this is all paid for, um, and anything on top is quote gravy. But like, um, this is CoreWeave certainly recognized that. Um, Lambda certainly recognized that. Corewave came to it. They're like in crypto, and they're like, oh wait, this is the better idea. Lambda was a hardware provider, and they're like, oh, a hardware reseller, and they're like, well, we should turn this into that. And so it's very smart. But I don't think like I think people didn't quite get that return. Like this is a very high. It's very high. So yes, you have a 5-to-1 return, a payback period of a year, and that's if you don't finance the chips. And everybody finances chips. Like
Yeah, yeah.
there's so then you have the I wouldn't call it financial engineering, but the very clever deals they did. At first, when you hear about these debt deals they did, it was like, oh, they're collateralized by the chips. It's true. Um, and you have people like, oh, well, the chips are worthless after a few years, which is entirely untrue. But like that wasn't the point. The point is these contracts they had were guaranteed by investment grade buyers like Microsoft. So if they
Mm.
defaulted on the debt, Microsoft had to pay it, not CoreWeave. But still, the point was like you had this crazy return, and like obviously that was unsustainable as a market forever, but it's working pretty well. And so that was a data point, and then you had the data point where Microsoft, if Microsoft decided that it was better for them to buy capacity from Coreweave than to build their own. Something that meant something, and it turns out the economics of them reselling Coreweave are better than the economics of them building in their own data centers.
Hmm.
Um, so that can really tell, and of course that was also for the OpenAI contract. So the next argument people had was, well, that's just because Microsoft didn't get capacity. Once they get capacity, it'll be fine. Well,
Yeah, yeah.
two
That's what I
things.
thought as well, by the way, initially, even though
Yeah,
I bought it.
yeah. Well, yeah. I mean, I had this, there's still questions on that, but number one, if you say like, oh, once Microsoft gets capacity, well, how would Microsoft get capacity? Step one, chips. NVIDIA does not want there to be three hyperscalers that control 60, 70% of the market.
Hmm.
So it's unlikely that they would say, oh, well, we're just going to kill all the competition and make these guys okay. Even putting that aside, let's say that's not the case. Let's say they could get unlimited chips. Building these data centers is not trivial. And it's not just like, oh, we have capital, we can build it. So number one, you can't retrofit the existing data centers they have. Between Microsoft, Google, and AWS, they're supporting about $200 billion, I think, per year in revenue on legacy CPU data center workloads. And that's great. You can't sacrifice that. And so you have to build new data centers that have new design, new cooling, new architecture, and new access to energy. Uh, so let's pretend like that takes a lot of capital. Let's put the capital issue away because it's a lot of capital. And those guys have capital. There's also timing and expertise. It's not. It takes a while to get access to the right amount of power. You do see like
Hmm.
AWS, Microsoft, these folks doing these giant energy deals, like in effect buying nuclear plants. But CoreWeave is out there just knocking down sales, and these numbers are public. They went from 0 to $500 million in revenue in a year in cloud, and from 500 million to I can't remember what the number was. It was like billion and a half to 2 billion. And every time you would see a debt deal, what the debt deal meant, if you listen to the company, meant they had a contract that supported that debt deal. And so if they say, "Oh, we're doing another one of these debt deals for $11 billion," it's like they must get an $11 billion contract. Uh, and so you had that story, right? Good story in a sort of finite, nice growing market. And then the legacy cloud market was growing like 20% per year. The GPU part of that market is, or the GPU part of the cloud market was exponentially larger, it was growing exponentially faster. Um, the bigger issue on infrastructure was as we evolved into not just artificial intelligence and LLMs, but as we evolved into application development that once looked like your traditional front end logic and database layers, with this LLM and LL-like approach to software design, the front end and back end collapse into this logic layer. Point being is if you're going to run something, if you're going to run applications like in any way, shape, or form, like NVIDIA wants you to, and like people are adopting because it's a really clever approach to software design, that logic layer has to sit on GPU or GPU-like architecture. I say GPU or GPU-like because there are also ASICs and other types of AI accelerators. But what that means is if pretend for a second, suspend reality and say tomorrow all of our applications are developed to look something like large language models in the way they interact with users and their own data. All of them have to sit on a new set of architecture, which is multi-trillion dollars of spend.
Yeah.
Multi-trillion dollar. Because it's not an upgrade cycle, it's a replacement cycle or a totally new cycle. So let's say it's one, two, three. Let's say it's 1 trillion. Are Microsoft, Google, and AWS going to own 70% of that? My belief is the answer is no. And so then you have these neo clouds like CoreWeave benefiting from that. They also happen to be really far ahead in terms of like network infrastructure, network design, data centers, the ability to get these instances up and running. It's funny to see how these people who have these GPU clouds. There's not all that many that are running them at the scale. Let me rephrase. There's really none that are running at the scale that Coreweave is, and not because the demand's not there. It's not trivial. The next step, I think, what you're seeing Coreweave do now, um, and this is based on just publicly available information, is it's turning into a full stack AI tools player. Infrastructure, we just talked about cloud. They bought weights and biases, which they can, and they offer an inferencing service through that was announced recently. The core scientific is for capacity and energy, so there's some kind of vertical integration there. This is not anything I know, but there was a rumor going around this week that Corewave was on that Twitter handle R4Rock that nobody knows who it is. But the rumor was that Corewave was in the market to buy Fireworks, which is an
Correct.
inference engine. And so all of a sudden, you're seeing like these companies move into, oh, it's just infrastructure to no, no, no. This is infrastructure with differentiated software on top. So you go to a CoreWeave to do your training, get your bare metal, do your inferencing. And so it's a very different model. It's a whole new ball game. And every time we have one of these shifts, there's the new players. When we moved from like kind of like on-prem data centers to cloud, most people thought Microsoft, Dell, EMC, et cetera, would own that. And
Correct.
AWS kind of quietly was like, we're going to virtualize it and sell it by the hour instead of by space and capacity.
Yeah,
And that
disruptive in
changed.
many ways.
Yeah. And so we're seeing that again.
Wow. Yeah, I don't think most people look at it that way, right? The narrative that you will get on the average investor is usually it's a financial engineering play. But now that they're completely changing the rules of the game, it becomes a lot more different. How does the CoreWeave data center look vis-a-vis Microsoft hyperscaler data center or Amazon hyperscaler? You've been at Amazon. Are those cost structures and use cases so much dramatically different? Do they have the ability to continue to be differentiated over time, you think?
I do. I can't get into too much detail, not because I have any specific interesting information, but that starts to get in below my or above my pay grade, just a low bar. But in short, to run these GPUs, you need a different data center design. Uh, a few things. One, they have to be cooled differently. These things are power hungry and get hotter than hell. And so they have to be in a differently designed data center. Number
Mhm.
two, they have to have access to enormous amounts of power. You can look it up, but if you see the power per rack required for H100 versus B100 or 200 versus the forthcoming Rubin line, where it starts to get there might be a 10x increase in power requirement. I forgot what it is, but you're talking about like massive power requirements, and you can't just like wake up one day and be like, oh, I'm just going to plug another 60 gajillion gigawatts of energy into a data center. So that's a fairly spectacular issue. And then the expertise in how to build these, get them up and running, and stay running is non-trivial. We already talked about the economics of these data centers for these kind of workloads is different, and so you can't take an inferior like a data center that is not designed for this and run GPU workloads in those data centers at the same economics. That's not sustainable. It just won't work. And so it's and if you had to guess, again, I don't know the numbers, but if you have to guess like what the fastest growing, highest margin um, workloads that are being out for bid now, it's got to be AI and AI like workloads. Like, and you know, who's getting those? It's like you know, that's the if legacy cloud commoditizes, which many would argue it did or has or continues to, and there's software differentiation. This is architecture differentiation.
Yeah. Walk through what your case thinking is on, let's play it out, let's say 5 years from now. OpenAI apparently is doing Stargate with um, my Masayoshi Son's SoftBank. Google is investing a lot. The total capex is like $236 billion. Does this become like an Equinox 10 years from now, or does it become like an AWS 10 years from now? Coreweave.
That I would short answer, yes to both, but on CoreWeave specifically, like let's broaden it out and see what's happening here. Um, funny anecdote. I took Equinix public 100 years ago. Been a long time, but um, it's not just the SoftBank money, and also actually there's a disclosure as it relates to Stargate. I am also an investor in Crusoe Energy, who's involved in that project. So disclosure. Um, the if you think about how this all works, you've got chips, and the chips go into data centers, and the data centers are sold at a on a like per GPU hour, right? And then those are either part of the same thing or run by an inference engine once they're in production. And then there's the model and application like OpenAI that sells other companies tokens per second,
Mm.
right? Or a number of tokens. Uh, and so when it was just computers, you bought chips and chips were priced per chip. NVIDIA makes GPUs. And now, AWS and CoreWeave and actually NVIDIA sell access to those chips in in GPU hours, dollar per GPU hour. So you can get an instance from any of these companies. Um, the cloud companies, CoreWeave, AWS, et cetera, sell access to instances. Um, then you have these inference engines that will sell tokens. And so that's
Mhm.
like Fireworks and other folks. Um, at the very top of that kind of like call it infrastructure stack, you have models. OpenAI, we're all trying to figure out how, like, who's going to sell what, how's it going to work. OpenAI is already training, no pun intended, the developer and enterprise world that the way you pay for access to models is in tokens. So what's happening? Is it going to be all disparate? The short answer, I don't know. I think they're all coming at each other from all angles. And so, like NVIDIA, I said earlier that I was like, are they competing with AWS by proxy through CoreWeave? Yep. They also have DGX. Is AWS competing with NVIDIA? Yeah, they've got Inferentia and Trainium. Uh, Google has TPUs. Microsoft is building an AI accelerator called Maya. So they're competing with each other. Um, Now you had NVIDIA bought a company called Lepton, and they sell inference as a service. So they sell tokens, right? Fireworks sells tokens. If Fireworks were to be acquired by CoreWeave, CoreWeave is selling tokens, right? And OpenAI is selling tokens. So you're kind of evolving to this world where there's this full stack of stuff, and everybody's competing with everybody, which is not unusual. But ultimately, I think in this moment, we're ultimately get to a place where the atomic unit's going to be tokens. And I don't mean crypto tokens. I mean we're talking about AI tokens, prompt tokens in, tokens out. So what does that look like over time? Short answer, I don't know who's going to be competing with whom, but they're all converging to compete with one another. And you also, I mean, like competitive chip companies to NVIDIA, like upstarts like Grok and Cerebras, cleverly have decided like we're not going to try to compete and with the CUDA problem, which is
Yeah, yeah.
you can make a much better chip, much faster, cooler, et cetera, chip than NVIDIA. Let's pretend for a second you can, but nobody wants to use it because it's a pain in the ass to code for. But if these companies are running their own data centers and selling tokens and not access to their GPUs, but they're selling tokens, that's that's where you're starting to see this integration. And I had this aha moment the other day. I was like, wait a second, OpenAI, the biggest one out there already in the AI space, that's already how they sell. So perhaps that's the model.
Awesome, David. Thank you so much. This was good. Good start. I'm sure we'll come back again, keep talking, keep chatting. Um, I'm sure people will probably reach out to you, connect with you on LinkedIn. And thanks for taking the time.
You bet. Thanks for having me.